Welcome to TradeTheNBI.com. This is John. This report is for the 21st, and it just seems like the Fed is going to do its best with just a short time to the election. If the market were going to crash, probably in the next 30 days or so, you would see some signs of it at this particular point. We still got rising gold, complete reset of steel, cyan still under red. All those things are positive, and the liquidity situation continues to provide significant support. Plus, you have nowhere else to go dramatically anywhere worldwide for yield. So there really aren't many alternatives from that aspect. And NASDAQ, likewise, right back up to its highs. Again, we talked about this when we had reached our, combined movement right here, that once we saw an expansion, we would see that uplifting. It just gets a little bit tougher because the fewer shorts you have, it just requires a bit more to elevate price. So, but intraday, we still get excellent ranges, so can't really complain about that one. We'll see the 5K chart in a minute. The euro, well above their target range, so we got plenty of flexibility and room to play with it. Also, likewise, I mean, all the way back from its early breakout, right back over here in July, where it took the second move up. We'd seen the previous ones go on before, earlier in June, when the dollar first started its devaluation setup. But there's also that critical level where they don't want to let it go too far, because the dollar still needs to be king, because it's traded through most commodities. And so from oil to gold and everything else, it's important for the Fed to maintain dollar homogeny. And as long as that is the mandate, there's always a limit to what they'll allow. But again, we talked about this from gold filling back in. It was just a matter of waiting for it to reset and stabilize for the next run back up towards the highs. And there's no question that we will definitely be going that route. From an intraday standpoint, we started off with a little bit of dip based off that, and then started to rework. I posted the buy signal that came in roughly here, and that's because we were looking at our other pink bar that was showing the Power Mode 2 crossovers. And literally, this is just showing the long short algo right here from instead of the ABM, but literally just small little dips and continued new buy setups, and all of them with the cyan under red, which is what all those cyan candles represent. So, and cyan under red is always a buy. And so what we did is fill back some of these positive extremes that get set up within here. I mean, you can even see it from back over here. The positive extremes, fills it back in. Then we had the other ones over here. Starting the next run, positive extreme, filled it back in. And then we went through a series of them, the first being right back here. And when we made little higher ones, we didn't quite come back and fill this one. In fact, I'll just put the line right there because it's just easier for everyone to see it. And you can see in post-market, that's exactly what happened. Filled it right back in place. And that's what you get, and that's why we follow those. You had the other interim ones in between right here. They got filled pretty quick. So it didn't take much time for those to fill back. And the same with the late breakout right after the market closed, popped up, and then we filled it back. Then we filled in this larger one. So they've met all their criteria, done what they needed to do, and now we're in a new setup. If we look at our flips, and what it's not really about following the trend, and what the point for this program was just to make sure that where we're getting our buy signals, we're getting a strong confidence within them, and that way we can work on eliminating some of the weaker setups. And a lot of that has to do with where our DOC steel setups are in relation to how the DOC red is functioning, and whether or not our dips below the negative 13 are coming off of strong moves up versus ones that are secondary wave lower. So it's sort of like we were creating lower lows and then the turnaround much briefer and before dip back down, and that's where we get those cyan crosses back and forth. And you can get a little choppy within those, but once you see the shrinking of the ranges between the long short algo where you end up with the plateaus, it's usually where you have your basing before you begin another new wave. So just an interesting way to look at it. As always, though, I will keep putting up these kind of charts on the Escape Chat. Trade well. We'll talk to you later.